would like to share my gold analysis this week, and I hope you guys are fine. Let's start with monthly chart as usual. And this month, as you can really see, the it is really bearish. It doesn't have any kind of it does not showing any kind of strength to going up. It's showing it is going to going down, and it's going to, this body is getting thicker and thicker day by day. Let's have a look into the weekly chart. And the weekly chart is giving us a different perspective. As you can really when you see the as per the monthly, it's a bearish, the bears in the monthly is getting weaker in weekly because of the last week. We get more bull power than the bear power, but bear one actually, bear close, we got a bearish close. And you can really see the bullish close on this week after it got a bear. And when you're looking into any candle anywhere in the previous, you can really see this kind of pattern is happening. So this is also that the bear is won last week and is closed below the previous week closing. And again, the bulls are there in the market. They could not manage more downside because the bull defined it well, and 1730s 36 level. So I'm expecting a very high, a very solid price action towards 1800 mark. Oh yeah, I probably am mad. We think I'm mad, but it's, if it's a bullish, it can happen, because I'm expecting a bullish week this week, a very solid, at least a $40 move I'm expecting on this week. $40 to $50 move I'm expecting this week. The reason is this: from 1830 we got a drop of $100, and we need to be correct at least $50. If you are a bear, the first wave is already finished in Elliotwave perspective. When you're coming into bearish perspective, you can really see the first wave is finished here. You need to move the second wave upside, and you need to continue the third, fourth, fifth. This is the way. If you are a beer, this is the structure is going to be. But I am not considering this way. It is not my choice, but it's there as an alternative view. But my choice is the first wave is here, and the second wave is to finish, and third and fourth and fifth has to come up and break the level of, touch the level of the yearly high. This is the yearly high. I'm looking for that target. Last week, the Fed is said they did not put the date for tapering. So tapering is real, probably started day after the Fed announced. So their campaign is already started. The tapering is there in the markets now. That's not a news anymore. It's already started. So it's a reality. Now look for another news. The news is coming from China housing bubble, which is just initiate, trigger the fear in the market. That fear can initiate a violent bull wave towards 1959. A violent bull wave. Why violent bull wave? I'll explain to you back in daily chart. Let's come back to this area. Here, let me drill down a bit in 4 hour. You see, this happened, and this is the NFP candle, NFP move. It happened on a Friday, and they closed that COMEX is around 1829 mark. And the next day the US was holiday, and after the next day, and that is Tuesday, when they open, the COMEX opened at 18 on 1809, I think 1808 the mark. So you can really see this violent wave is touched to the COMEX sell position. So the COMEX short short people has been short at the level of 1808. So they're still holding the short. That's why this prices continue back there. So they shorted at that level, and they none of the COMEX traders are tested back to the 1829 level. So keep that in your mind. There is a market gap they intentionally created, but that's not in the chart, but it's the COMEX chart. You can really see what is that gap is. It is almost a $20 gap. Now what happened? It brought back $100. What registered in your mind? You registered in your mind now the target of 1680. Very good, interesting. Now this is the time that you have to short for 1680. Yes, exactly. As some looking for you to short that 1680, right? They are going to looking for sellers now. But fortunately or unfortunately, they gonna get the price up there here 1830 to fill this gap because they have an opportunity now. Reason is there's a fundamental reason. Chinese bubble, housing bubble, can they can say when you're moving this momentum, we can expect the PR that you get Chinese house crisis is in the market, so that's why the gold, trade investors and fear they're buying gold. You can read this news, but it's not the case. They are already planned this where this price has to be moved. um, so I am expecting a bullish wave towards 1830 to fill this gap. And still, you guys, what happened when you are coming over here? You definitely short it. The reason, if you're looking in a smaller time frame, it is a resistance supply line. You short it. No, you don't want to short it. The price push back up, and once you push back up, you short more because you wanted to test this level back again 1830. You won't get that level. They continue to move again up because of the news, the fear in the market. Investors can drive the market without testing the breakout level. Once you getting this test level, you we think we're gonna break it somewhere around. We're gonna break it the level of yearly level of 1950 and are gonna test back to the all-time high, but it's not happened. Once we reach the price over here, we get a negative news, something like, okay, Chinese government is did something to for solve this problem. So that kind of stuff, when price reaching over 1950, you get those news. And definitely the price will going back down and back below and test is a level of 1680 and break below 1680 and move towards somewhere around 1520. That's what exactly gonna happen, because when Chinese government solve the problem, tapering is still there in the market. That's where they will try to tighten again, and that news will come out. And the third wave, or maybe coronavirus mutation news will come out. And you get Chinese government intervention on the market. That's also come out. Everything will be positive, and that create a panic selling in gold. That's what I'm expecting. That's what fundamentally I am expecting. It's my choice, and it's my, as per my trading experience, I saw this kind of violent move in the market. So let's have a look technically what happened to the corrective structure over here. I'm a trader, so I was looking for bullish and bearish wave both. And I'm looking for price action. I'm a price action trader. Even though I'm doing a late wave, I don't follow wave. Waves are not my trade setup. Waves are just analysis, and my trade setup is based on divergence, the indicators of the classical indicators of touch and Mac. I'm using it, and based on this, I am taking position. So now I hear that there is, I can really see this is like a third wave kind of structure. Here you can really see that it's holding above our sold position. And the difference here, it is not holding over. It's not overbought position. It is actually turning back up. So I have a hope it started to move back up in daily, by indicator itself, and I can really see the raise divergence coming into the MAC signal line. uh, and the Mac always, yeah, it is a very bearish at the moment, and it is advisable to take sell trade on gold. As per indication and the signals here in the moving averages, everything is telling me to take sell position on every retrace, which is which is the highest, and 90 percentage of people or traders want to take it. And I'm do the same thing. I will not do anything exceptional. But when I'm why suppose if I'm bullish towards 1950, you may ask why I could not buy over here and hold it. See, I take position, very little position over there, and then I hold it till the things break out. Uh, but I reduced my positions when price reach here, the buy positions, and once I get a break here, comfortable break, and comfortable break on this 200 days moving averages, then I am happy to take buy position. I'm risking a lot on bull and take it, because we have a chance to take at 1830 to 1930. It's still $100 there. I can take it comfortably, and I can risk more. So I don't want to risk it here, because there is a chance probability to going back to 1680 in case. When you're looking into daily candle, this candle is looks like a harami candle, and this harami candle means actually this does not take on the previous low and does not take on the previous high. It traded in between the previous day candle. So normally when you see some kind of candle close something like that over weekend, there's a trade continuation, and it can, as I see, even if I put the label of y is, it's a combination of a combination patterns, like it's a combination of ABC pattern. So here I really see ABC. I took, this is W and there's ABC, two, there's a zigzag pattern over here, so I labeled as X. And here I can't put Y over here. When there is a X, we need to have ABC downstairs. There is nothing there in here to find me to ABC. So that was my problem last week. And this week I clearly see that this is a and this is a B and this is a C, and I can label this as an ABC, and that's why I put Y over here. If I'm wrong, if this is a second wave and this is a continuation of a third wave, in a bearish moment it can happen. So that I will always keep in that mind. So based on the daily candle, I am this daily candle telling that the trade continuation is there. When you're coming into 4 hour chart, it is showing we are going for a 1770. When you're looking into the harmonic pattern, we really see this is coming as a bad pattern, coming into directly into supply line, which is a bearish pattern that we can take it. But this bearish pattern is a less live, because we cannot go back here. We're gonna touch here, and you know why this level is getting again a bullish pattern that's called 1 to 1 pattern. That 1 to 1 pattern is pushed back up. It's 1 to 1, not bearish. This is a 1 to 1 bullish over here, push back up there. There's a chance I see it, because I see when the price over here, there's another chance for a bullish pattern forming around this area, around 1760 1750 mark. And then that create a bullish momentum, and it break the supply line, push back up somewhere around 1800 mark. um, that 1800 mark, when you're coming into a bigger perspective, in a bigger wave, there's a shark wave coming in that is very rare in gold. But this time I validating because of there is a gap produced by market here. So that's why I'm expecting the price can turn back up there and create another position of another leg of bullish towards 1830. And when you're coming over that level, this dark pattern will not be valid, because it definitely, the nature of the wave is going to change into the third wave, and it's going to be very impulsive, and that break the 1830 and continue upside. So waiting for that opportunity, and I'm also waiting for that opportunity for a bull move. But still I'm keeping that in mind, the bearish, because of this harami candle. Once the price break this 15 1757, that pattern, the harami candle bear projection could be invalidated, and it can create a move towards upside. When you're coming back to the daily from daily to weekly, as you can really see, when you're going to flip the chart, the next candle is not going to be continuation. Instead is coming back and touching somewhere around 1805. That's what I'm expecting it. So when you're coming to the flipped chart with a monthly, what happened when the monthly close over here, it's a continuation of the trend. So I'm expecting, that's the reason I'm expecting 1958 as my technical target. So thanks for you to watching, and thanks for to listening. I hope you get good green pips next week. And this is Raiju. Thanks for listening. Signing off.